This is a session about international funds. This has been the most talked about segment of investment in last 12 to 18 months for a variety of reasons. One being the fund offering by Edelweiss Mutual Fund along with partnership of JP Morgan. We have currently 6 funds which offer access to almost 85% of global markets. We have a US technology fund, we have a Greater China fund, we have a Euro dynamic offshore fund, so on and so forth. So you name it and we have it, kind of a basket that we have for our investors. It has grown very, very rapidly over last 15 odd months. 15 months ago, the entire AUM of this space with us was 200 crore. Now it is 3,200 crores. To talk more about it in details, we have with us Niranjan Avasthi, who heads our product and marketing. Before joining Edelweiss, Niranjan was working with ICICI Prudential as head of product communication. With 13 years of experience in the industry, I invite Niranjan Avasthi to enlighten us about international feeder funds. Over to you, Niranjan.
Thank you, Deepak, and hello, everyone. I hope everyone is safe and sound at their homes. So as the agenda goes, I'll just quickly try to take you through our international funds offering, how they have performed against the benchmark, what helped, and how they are positioned currently. So as Deepak mentioned, we have a wide suite of international products covering almost 80% of the world markets. So on the Western and the developed world side, we have the US Technology Fund, which was launched recently, which invests into upcoming technologies which are disrupting the older technologies. We have a US Value Fund, which is very different from a mainstream US fund, which invests in value stocks or stocks which are undervalued today in the US market. Then we have the Edelweiss Emerging Market Opportunities Fund covering the entire emerging market space. We have a Euro Dynamic Fund covering the Euro area. And then coming to the eastern part of the world, we have a Greater China Fund, which invests in the Greater China region consisting of China, Taiwan, and the Singapore stock market. And then we have the ASEAN Fund, which is basically the Association of Southeast Asian countries investing in markets like Singapore, Indonesia, Philippines, Vietnam, Thailand, and Malaysia. So broadly over the last 3 to 5 years and even longer than that for a few funds, the performance of these funds have been very, very strong when we compare them with the benchmark. The Greater China Fund, which is one of the oldest fund in our product basket, has been outperforming its benchmark over since last 10 years. Over the last 3 years and 5 years as well, the outperformance is to the tune of almost 10% and 8%. The US Technology Fund, which was launched recently, and that is last year in the month of March, which completes a year this month, has outperformed by almost 10% to its benchmark. Of course, the returns have been very, very strong over the last 1 year, and we'll come to that, what has contributed to this return and what lies ahead as well. The emerging market funds also has outperformed the benchmark by almost 4 to 3% over the last 3 to 5 years. The ASEAN Equity Fund, which I mentioned, invests in the Southeast Asian countries. Again, strong outperformance against the benchmark, almost 5% outperformance over the last 3 years and 5 years against the benchmark. The US Value Fund, while value as a theme has not performed compared to the growth theme in the US, but still the numbers talks a lot. Over the last 3 and 5 years, even this fund has outperformed its benchmark by almost 1.5 to 2%. And lastly, the Euro Dynamic Fund, which invests in the Euro region, again has outperformed by almost 2 to 3% over the last 3 and 5 years. So all in all, in a nutshell, if you see almost all funds have outperformed their benchmark handsomely over the last 3 years and 5 years. And of course, in last 1 year, the outperformance has been even much better because of the active management which they have been doing over the last 1 year. So what has contributed to the performance? So we'll try to cover the key funds over here. So starting with the US tech fund, which has completed a year now, very interesting names comes up if you see the stocks which have contributed to this fund. And usually people will believe or will have a view that the FANG stocks would have contributed a lot to this portfolio, but the fact of the matter is the FANG stocks has only 8 to 9% of the overall portfolio, and the major outperformance which has come in are from the names like Tesla, and Tesla needs no introduction. Company which is changing the world. Almost half of the automotives will be electric vehicles by next 10 to 20 years, and Tesla is a leader amongst it. The stock has delivered almost 750% returns in last 1 year. It's contributed almost 10% to the overall fund performance. Enphase Energy, again, a very interesting stock or a company which is basically into solar panels and solar technologies installing at residentials. And okay, so coming to the slide, lastly, company like company which is Twilio, again an online communication services, has again contributed a lot. So broadly in terms of sectoral contribution, hardware, software, and IT services contributed major returns in the fund. What changed over the last 1 year in the fund? So it actually remained overweight or increased its overweight slightly in semiconductor, internet companies, and software service providers. Also, it went underweight from overweight to underweight in some software companies and internet companies because of the valuation reason. How the fund is positioned currently, the top 10 holdings remain largely the non-FANG ones. Companies like AMD, Lam Research, Synopsys, most of these are into semiconductors and automobiles. Tesla, Twitter, Facebook, again Twilio and analog devices remains as the key holdings in the fund. If you look at the portfolio quality today, the EPS growth over the next 12 months is again healthy at around 24-25% compared to the benchmark, which is stated to grow at 15%. Now, if you see the contribution of technology as a sector in the overall earnings growth, it's been almost 2 to 3 times better than the traditional sectors in the US over the last 5 to 10 years, which is again expected to continue. If you see the S&P 500 non-technology names and their earnings growth potential, it's close to just barely double digit, whereas this theme is stated to grow at healthy double digit numbers over the next 1 to 2 years. Quickly coming to the another fund which is widely held by our investors and is the Greater China Fund. So Greater China, as the name goes, it invests in the Greater China region, which covers China, both the Asia's China market and the offshore China market, the Hong Kong stock market, and Taiwan. Again, if you see, a very strong performance was displayed by this fund over the last 1 year and 3 years. Broadly, what has contributed, which stocks have contributed is, stocks like Kindigi, which is a software company, Wuxi Biologics, biologic research and development company, which is helping a lot of mainstream pharma companies to do research on oncology and related technologies and diseases. Xpeng is again widely known as the Tesla of China. It is one of the leaders when it comes to electric vehicles manufacturing in China. Pinduoduo is again a very interesting platform for farmers and distributors, which bring farmers and distributor on the one online platform. Again, has contributed a lot to the returns over the last 1 year. Hongsu TigerMed again is a medical consulting firm helping a lot of leading pharma and healthcare companies in their clinical research and allied services. In terms of sectoral contribution, financials, consumer discretionary, and healthcare has contributed majorly to the overall returns. In terms of country contribution, the fund has always remained, at least over the last 3 years, have remained overweight in the mainstream China market, which is the Asia's market. And that has actually majorly contributed to the overall returns in the fund. The current positioning almost remains same. The fund is overweight in sectors like technology, because China, like India, is again changing very, very fast. A lot of companies are adopting to newer technologies and digital platforms. Consumer discretionary, financials, it's underweight, and healthcare again, it is overweight, because just like India, even China is stated to spend a lot. The Chinese government specifically is stated to spend a lot on healthcare post the pandemic. So it largely remains overweight on these 2-3 sectors, which have structural growth engines in place. In terms of region, the fund has almost 71% exposure to China, which is large overweight compared to the benchmark. Again, on the portfolio quality, the expected growth in the fund, the earnings growth over the next few years remains healthy at almost 20-21%. Lastly, the emerging market fund, again, a very interesting fund. What has contributed is, largely the healthcare information technology names like TSM, which is one of the world's largest semiconductor company, Samsung Electronics, Samsung SDI, which is again at the forefront of manufacturing batteries which are used in electric vehicles. Tencent Holdings, again one of the largest online gaming platform based in China, which has again contributed in this fund. Lastly, the entire product basket, as Deepak mentioned, is basically run by the JP Morgan fund, with whom we have partnered. As you know, JP Morgan is one of the largest asset managers. They have 350 plus equity investment professionals spread across the world, which actually helps us, managing these funds because they have local expertise. They have presence at 5 global locations and also local offices in countries like China and Taiwan, which actually helps us deliver, helps the fund deliver alpha, which we have seen over the benchmark over the last many years. So broadly with this, I would like to end my presentation and we can move to question and answers.
Thanks a lot, Niranjan, to talk about 3 funds at a go. It was quite interesting. What I would request is all of our speakers, including Radhika, to join live for a final question and answer session with all our participants. I would take questions one by one and try and keep it as focused as possible. We are overshooting the time because of network delays, etc., but we'll like to end on a positive and a more informative note. So, Niranjan, the first question is for you, and this is the most interesting question that I have ever, heard or read this time on international funds. It's to do with taxation, but a different kind. Does the taxation applicable to where the fund is domiciled affect the NAV in India? For example, FOF registered in USA as compared to FOF registered in Luxembourg, which I presume have different tax structures.
Right. Yeah, it's a very important question. So broadly, all these, and I'll talk more about the funds which we have. So most of these, in fact, all funds are domiciled in Luxembourg. We have a treaty with the specific location, that is Luxembourg. And for a mutual fund investing in these funds, so Edelweiss FOF investing in JP Morgan fund, there is no tax impact whenever we sell or a unit. So there is no capital gain tax. The only taxation which is there is on the dividend, but the underlying funds are a growth option, like we say in India, and hence there is no tax incident at the fund level.
This is a very interesting question. All I've ever heard was question on the domestic taxation, but international one is a very thank you for whosoever asked this question. Really appreciate it.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.